Prime XBT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on Prime XBT in minutes.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Birb. Globe is an upcoming crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts. Sign up for early rewards at thebirbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at thebirbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI.
All right, sorry about that. My mic was muted for some reason. All right, welcome guys. Welcome to the first webinar of the day. And in this one, we are going to talk about risk management. So before I start, I want to ask you all, we had this dump or whatever you want to call it on Bitcoin, which took most of the altcoins down. So you have seen that when a move like this happens, most likely a lot of the altcoins that we are trading, that we are having open positions in, will either move down to hit a stop loss close to entry. Obviously, it depends on where the trade is, where it's trading at. But usually, if you hit TP1 or TP2, you want to move stops to entry. So in cases like this, you are either going to get stopped out at the original stop out or at entry, right? And this happens across the market, right? So if Bitcoin dumps, all coins are going to follow, most likely, like you've seen during this move right here. So I want to ask you all, how many in here have lost more than, I don't know, like 25% of their portfolio on this move here? Because I've seen people talking about how they've lost a quite substantial amount of money and a quite substantial percentage of their portfolio on this dump. And I'm going to explain to you and show you guys how this should not be possible using proper risk management, right? It should not be possible to lose a bigger part of your portfolio no matter what happens in the market. I'm going to be talking about the risk management and the trade management routines that I am using on a daily basis in my day trading, right? So I'm going to quickly, first begin with explaining the importance of risk management, why it's important. I'm going to then show you, some rules and stuff that I have in my trading plan, right? Exactly, 25% is massive, but one of the biggest problems, and by the way, guys, if you haven't already, hit the like button, subscribe to the channel, and press that bell notification button. There's going to be like in the lower right, you're going to have a orange bell which says subscribe. Press that one. Yeah, so 25% of portfolio on a day like this is huge, right? But the problem that most people are doing, or the mistake that I've seen a lot of people do, is S&P cycle low is 10 trading days away. Well, no, I'm not really going to be talking about that today. Interestingly enough, though, if you look at the S&P 500, when the S&P 500 started dumping, we saw some volatility across most markets, and Bitcoin definitely followed to the downside. So that's definitely something to keep your eyes on. Anyway, one of the biggest mistakes that I see new traders do, especially in the altcoin market, is the market looks very, very bullish. So they keep opening up new positions on altcoins where they see a setup without understanding the relationship between Bitcoin and altcoins. And in this case, you should view all your combined altcoin bags as one combined bag of risk, right? Because let's say, for example, and we're going to be talking about this later in the webinar, but I think this is very, very important. So I really feel like everyone should know and understand this. If the market is looking very bullish, right? And you are seeing 10 interesting altcoin opportunities, right? You have 10 interesting setups on altcoins, which you could enter right now, right? So let's say you stick to the 2% rule, that you're only going to risk 2% on your portfolio on any trade. So you enter with a 2% risk on all of these setups at once because, they look good, they line up with the TA, everything looks good, right? So you enter 10 positions with 2% risk on each, which means you are actively risking 20% of your portfolio if Bitcoin moves the other way, right? So if you enter these positions and in the next couple of minutes, Bitcoin dumps. Well, obviously, a majority, if not all of these setups are going to get stopped out, right? Which means that your 2% risk per trade has now gone to 20% risk on the whole portfolio in a matter of minutes, right? To combat this, I have a couple of rules that I follow, and I'm going to go through that later. But first, I want to show you the, how to actually calculate your position when entering a trade. And something very, very important to remember here is even with a very good trading system, you're never going to be profitable with a bad risk management system. Now, so I'm going to repeat that because this is the most important part about trading, in my opinion, right? If you have proper, good risk management, you will be profitable with a below average performing trading system, right? But if you have bad risk management, you're never going to be profitable even when using a very profitable trading system, right? I hope that's very clear, and I hope that open your eyes to the idea of further researching risk management. And if you don't really know anything about risk management, you need to start learning about that right now. All right. So, and the beautiful thing about risk management is that the whole goal is to understand that this is the game of trading is a marathon, not a sprint. I think you've heard this a lot of times. And the goal is to be consistent with your risk. It doesn't matter if you risk 1% per setup or 2% or 4%, whatever, right? But pick one and stick with it and be consistent with your risk profile, right? If you risk 1% on one trade, you got to risk 1% on the other trade as well. I've seen some people, they increase risk when they think it's higher probability that the trade is going to work out. You need to be a very advanced trader and very experienced and have a lot of statistics to back that statement up. If you want to increase your risk with the confluence of the setup, or if you want to increase the risk because you might think that this setup is better than the other ones, you will have to be sure that the stuff that you're looking at is actually increasing the win rate. And to be sure that the stuff that you are actually watching will increase the win rate, you will have to have gathered a lot of statistics on many hundreds of trades. So I do not recommend going up and down in your risk on setup if you don't really know exactly what you're looking for to increase that risk, right? So be consistent. Stick with 1 or 2% on all your setups and don't change that. The reason for that is, let's say, for example, you want to go long on Bitcoin and you risk 1%, right? And that one is a winner, right? And the next time you see the exact same setup, so let's say you go long Bitcoin, setup looks good. It's a 2R, which means you risk 1%, you make 2%, right? So you now have a 2% winner, right? So now you go, 1 week later or a day later, whatever, you see the exact same setup, and you can tell yourself that, all right, so because of the fact that this setup was a winner last time, it's most likely going to be a winner next time as well. So I'm going to increase my risk to 4%, right? Because it's still a 2R trade, so I'm going to be making 8%. Combined with the last winner, that's going to be 10% gain on 2 trades. The problem is, if that trade is a loser, you are now back in minus 2% because you're losing 4% on the second setup. So you're giving back the profits from the first setup and then some more, right? So on the third trade, you're saying to yourself, oh man, I just lost the last one. Now the exact setup comes up again. This might be a loser. I'm going to risk 1%, right? And the third trade is a winner, which means you make 1% back, but you're still down 1%, right? So on 3 setups, you're down 1%, or at break even, I guess, if it's a 2R trade. So let's say you're break even on 3 trades because you risked 4% on the second trade. But if you have risked only 1% on all of these 3 trades, you would be up 3% instead of being at break even, right? So it's very important to keep your risk consistent because you have no idea which trade is going to be profitable. The whole goal with trading is to stay alive in the market for as long as possible so that you will be able to live long enough in the market to experience the big winners. And the big winners are going to pay for all the losers, right? So if you have a losing streak of 5 losers, right, with a minus 1% on each setup, you're now down 5% on your account. But then you get a, 6R winner and you're up 6%, right? So it's all about staying consistent and trusting the process. If you have a profitable system, you know that in the long run, you are going to be profitable, and your goal is to keep risk as small as possible. And letting the winners run to be able to have big winners to pay for the losers. And that's the general idea with why risk management is so important. And what else? Yeah, so stick with 1%. It doesn't really matter what, 1, 2, 3, 4, 5, doesn't really matter, but I'd recommend 1 or 2. Personally, I risk 1% on all my setups. Well, let's do a calculation example here. I actually forgot to pull up a position calculator, but I know that in the exclusive resources, I think it is, in the Birb Nest, in the exclusive resources in the Birb Nest Discord, we have a position calculator that you can use. For Forex, I use this one. Not sure if that one we have in Discord is working for Forex, but Forex, this is the one I use. Go to myfxbook.com, Forex calculated position size. And here you can easily see, like, you have your USD, account currency is USD. Let's say you have a 100K account size, you want to risk 1%, stop loss is, 25 pips below entry. And this will give you the position size, which in this case is 4 lots or 400,000 units, right? And obviously 1% of 100K is 1,000. So let's do that calculation in on this setup right here. And this is very important, guys, because I've heard that, you know, sometimes we post our official calls and I'm so thirsty, man. Sorry. All right, so sometimes we post our official call and Troll Dump is just trolling again. I see. And they ask me, like, I write 1 to 2% risk on when posting the setup, but then the stop loss will be, you know, 10% below entry. And obviously that makes no sense, right? If the stop loss is 1 to 2% and the stop loss here on the short is 10%, it wouldn't make any sense, right? But the thing is, when we write 1 to 2% in on this setup, that means you're supposed to be risking 1 to 2% of your trading capital, right? So on a setup like this, I'm going to show you how you need to calculate your position so that this trade right here will lose you 1% of your trading account. So let's say, as an example here, we have an account with $100,000 account size. So trading portfolio 100,000, right? And we want to risk 1% of that, 1% of account, which is 1,000, right? It doesn't matter, USD, whatever. So we want to risk 1% and we want to risk $1,000 on this setup right here. Now, the stop loss on setup is 10%, right? So you can see right here on this setup right here, stop loss is 10% below entry, right? So what you need to do right here is if you go all in, if you enter this setup with everything you have, you will obviously lose 10% of your trading capital, right? So if you enter with everything you have in this setup right here, you will lose 10% of your trading capital, which is 10 times more than you should risk. So obviously you need to enter this position with 10,000, right? Which is 10% of your capital, and the loss will then be 1,000. Right? So the position size to be able to lose 1% of your portfolio should be 10,000, right? So on this setup right here, you enter with a $10,000 position size to be able to risk 1% of your portfolio. And in this case right here, win 2.93% of your portfolio. So you're going to be risking $1,000 to win 2,930, right? So that's how you should interpret whatever that word is, the setups that we are posting, right, with the risk that we are giving you, 1 to 2%. So you're going to be calculating your position using this formula right here. And you can of course use position calculators like the one here that I'm using in Forex, or the one that we have in the exclusive resources in the Discord. All right. I think that's like the most important basic stuff, right? That's the most important basic stuff. It's all math. It makes total sense. It's just logical, right? By the way, guys, don't forget we are running a giveaway today. So please use the link in the description of the video and you have a chance to win 1 month of calls only subscription. So use the link in the description below and add the secret code that we are giving you right now on screen. And remember, subscribe, like, and hit that bell notification. Right, so what else are we going to talk about? Yeah, so honestly, there's not much to talk about. We'll probably have like 20 minutes more, so we're gonna have maybe 15 to 20 minutes at the end where I'm going to be able to do maybe a market scan and take some sharding requests. So or of course, if you have any questions regarding risk management, but you're probably gonna have some time to ask. So I'm not really sure I understand the question. So I will always I will never add risk to my setups. I'm pretty sure that what you're referring to. Yeah, exactly. So adding to a winning trade, and I never do that, right? So especially not on my day trading. So when I'm like spot trading, swing trading altcoins, I can add some to the position. If, for example, I see that I'm entering at my entry point and price reclaims a major support area above, and I see the exact same setup above, and my original stop loss is at entry, I might add to that position by just buying some more spot as to adding to a winning position. But with my day trading, I never do that, right? My trade management, like I have very strict rules when it comes to trade management. At TP1, I take some percentage profit and I move my stop to entry, and I will just take profit at the TP areas without adding anything to the position. And the reason why I'm not adding to my position is because it's just not working for me. I'm constantly trying to develop and develop my edge and try to better my system. So I'm keeping a journal, right? And in that journal, I used to always add if this is a trade where I've added to it as a winner. And usually when I did that, I've seen that because, when adding to a winning trade, your average entry goes higher, obviously. So your entry point is going to be higher and you have to adjust the stop loss. And most of the cases when I did that, I've noticed that I got stopped out at entry and it was a break-even trade. And if I did not add to the position, it would be a winning trade. So that happened in more than 50% of the cases, which for me, it makes no sense to use that strategy. Obviously, it works a little bit better in my spot trading strategy when trading altcoins, and for some people that might work very well. But for me, it's just better to plan the trade in advance, and then when everything, when all the take profit just gets hit, I just move on to the next trade. So I'm just not going to add to any trade, basically. All right, so let's see. So this is the basis, right? How to calculate a position. What you also need is some risk management rules, right? So I'm going to go through some of the rules that I have. And I recommend you make a list of risk management rules that you keep and you follow, and you strictly and disciplined, follow these rules as part of your risk management strategy, right? So first of all, like the first rule is, stick to a specific. Let's see if I can type specific percentage per setup to risk or whatever, right? And this is what I talked about at the beginning. You need to have a specific percentage that you're going to choose, and you're going to stick with that one, because this is all a game of probability, and you don't know which trade is going to be a winner or a loser. So it's kind of like, I feel like it's more gambling to increase your risk depending on certain factors if you're a beginner. Like I said, if you're an advanced trader and you've been trading for a long time and you have statistics to back up what's working and what's not working, you can increase your risk. But then again, think of it this way. If you have setups where you take 1% risk and then you have setups where you take 2% risk, because the setups with 2% risk is higher probability, then why would you even want to take the trades with 1%, right? It makes no sense. You're always going to be focusing on the trades with higher probability. Obviously, if you have like a system where you add risk, the higher the probability of the trade is, it makes no sense, because you should never take the trades which have, the lower probability, right? So you stick with a percentage and stick to the trade that makes sense. All right, second rule, you should have some type of daily loss limit, right? And what to do if it hits, right? So you should have a daily loss limit, and you also need to have some type of rule or plan on what to do if it hits, right? So for me, for example, I have a 5% daily loss limit, which means that if I lose more than 5% in a day, I will, take a 24-hour break, right? And this should be based on your journaling and your statistics gathering. So for example, let's say that you have been journaling your trading for, a couple of months, and you see that it's normal that you lose, it's normal that you lose 4%, for example. My kids are outside the office and going crazy. So sorry about that. Kind of confused. So yeah, what do you do when that hits? So I have a 5% daily loss limit, and I take a 24% 24-hour break when it gets hit. And I based that 5% daily loss limit on the fact that I can lose 3 or 4% in a day, no problem. But when I start to risk, lose more than 5-6% in a day, that's when it gets worse and worse and worse, right? So to protect myself from a major drawdown, I make sure to stop trading when I have a 5% loss in a day, right? The third one is weekly or monthly stop loss. I have a weekly limit, which is 10%, right? So if I lose, and of course, and what to do if it hits. So weekly loss limit for me is 10%. If I, but it makes more sense to have this like a monthly loss limit, right? So if you lose more than 10% in a month, you take a break, right? So for example, if I lose 10% in a week and it's Thursday, right? I'm just not going to be trading Thursday and Friday and the rest of the week. So I'm just going to take the rest of the week off, and I'm going to spend the rest of the week analyzing the trades that I have taken that brought me to a 10% loss, right? And I will come back next week with these loss limits at 0 and try again. And the reason for having this is obviously not to have a too big of a drawdown and to limit myself and not to lose too much, and also to be able to, when the weekly loss limit gets hit, I have a I also have a reason to kind of go back and look at my trades and kind of try to figure out what went wrong. Fourth one is yes. So what to do after a big winner, right? And 5, what to do after a big loser, right? And this is important because usually some of my biggest losers comes after either a big winner or a big loser. So when you have a big winner, you tend to become, you know, so when you have a big winner, you could become overconfident, right? And you tend to not see the small details, right? So you tend to kind of ignore some of the stuff, and that will usually lead to losses, right? So when you become overconfident, it's easier to kind of forget about the small important details. And the same thing with a big loser, because when you have a big loser, a lot of people tend to start to revenge trading and start over trading, right? So what that means is, you have a big loser and you say to yourself, like, all I need now is a big winner to make it all back. And they start looking for that next big winner, and they kind of get stressed over the fact that they have to get a big winner to make up for the big loser, and they're just gonna dig a deeper hole, and it's just gonna get pretty ugly, right? That's why we have the daily loss and the weekly loss limit. And also, when having big winners and having big losers, taking a 24-hour break will definitely help you get grounded and get back and stay focused. Right, what else? Yes, open risk. So I've said that I only risk 1% on each setup, and my open risk is 4%. And now, what does open risk mean? Well, if you enter 4 positions at the same time with 1% risk on each of these setups, obviously you are now in the market with a 4% risk. So if all of these setups get stopped out, you will lose 4% of your trading capital, right? So that's your open risk. And I have my open risk limit at 4%, which means that I can only have 4 open positions at a time, where the stop loss is below entry at the original area, right? Now let's say that on if I have 4 positions open with 1% risk, and and one position I move my stop to entry on one of these positions, I now have 3% open risk, which means I can now enter one more setup. That means I have 5 open positions, but only 4% open risk in the market, because one of these setups has the stop loss at entry. And then another important thing that you should have a rule about is how many open positions, right? And I try never to have more than 4 or 5 open positions in the market at any given time. So I try to never have more than 4% open risk, and never more than 4 positions at a time. And this is strictly because, because of trade management issues, really. If you have many open positions, like I've seen some people have like 10, 20 altcoin positions, how are you going to manage that, right? How are you going to have the time to actively manage 10 to 20 different positions? Not only, and like if you can ignore the risk associated with having 10 to 20 positions open. Maybe you have like 10 to 20% open risk, which is crazy. But how are you going to actively manage all of these for 20 positions? If you have alerts on all 20 positions, and the alerts get hit, I mean, Worst case scenario, you have like 20 alerts getting hit in a matter of hours, and you have to actively manage those positions. So it definitely adds risks. The more positions you have at any given time, it definitely adds risk to the fact that you will have a much harder time dealing and managing those positions. That's more of a trade management rule. But I think trade management is definitely very similar to risk management. And in your risk management plan, I mean, in your trading plan, everyone should have a trading plan. And in your trading plan should be a specific part where you write about your risk management rules, right? And in that part, you will also have trade management rules. And trade management rules is like, when are you going to move stop to entry? When are you going to take profit? Where are you going to take profit, and why are you going to take profit? So, for example, for me, when scalping, I try to move my stops to entry at 1-1 and take some profits at 2R, and then some at 3 or 4R, depending on the fibs and the setup, and then I have like 25% of the position open, and I will only exit that part of the position when my trailing stop gets hit. And my trailing stop, I will move that up manually with every new swing in price action based on the setup. So that's also something you need to figure out, and you will only really figure this out by back testing, right? So you have your trading system and your trading strategy, and you back test that one with different trade management rules. Like, for example, you can, let's say you back test 100 trades of your system, and you use one specific trade management. Like, for example, let's say that you, on all of these 100 trades, you move stop to entry at 1-1. And then you backtest again, and you have 100 examples where you only move stop to entry at 2R, right? At 2-to-2 risk, or 2-to-1 risk reward ratio. And maybe in your case, you will see that the profitability is actually higher if you move stops to entry at 2R. So that's going to be part of your trade management plan, right? All right. So another thing I want to all right, so this is a important question, and so personally, I think that you should, even with a small portfolio, you should trade like it's a large portfolio, right? Obviously, it's going to take a long time to grow that portfolio, but I do believe that if you trade, like, if you let's say you have a very small account, but you trade that account like you're trading millions of dollars, right? That's going to make it much easier the day when you actually start trading a large account, and if you have all that in place already. On the other side, I mean, so what you can do as well, I would not really recommend this, but I've seen some people really have great success with this. And what you do is, when you have setups, let's say, for example, you have a very small account, and risking 10% of that account might not be a large sum of money, but 10% on a huge account will be a lot of money, right? So if you have a small account and you feel like you could actually risk 10% of that portfolio, you might, in some cases, when you have this setup that where everything aligns, where everything is just perfect, increase the risks significantly. But and I've seen a lot of people recommend this, and a lot of people have good results with this. But honestly, I think it's just not a good idea, because if that 10% risk trade is a loser, it's going to be very hard to, if you have like 2 or 3 10% losers, it's going to be very, very hard to make that back, right? So how do you say that trade your account like if you're managing millions of dollars, even if you're not, right? Because if you are successfully trading, you can always try to get funded, get investors to invest in you. If you have a profitable system with a very good strike rate, you can actually get funded. So that's obviously a recommendation. That would be my recommendation, not to risk 10% on the best setup, but to actually develop a very good system and look for funding if you can't afford it on your own. All right. Then we have the risk, reward, and win rate infographic here. So you can actually find this infographic and many, many more infographics on the birbnest.com. And in the resources section, you have a infographic section with a lot of interesting and good stuff like this one. So this is not really part of the risk management, rules and stuff like that, but this is also very important. And I just want to show you guys this, that a lot of you, I think, are expecting a very high win rate. Like, for example, many of you want to have like a 70 or 80% win rate. And I'm here to tell you that, first of all, having such a high win rate, like 80%, it's not common, right? It's very hard to develop a system with that high win rate, and it's also very hard to consistently stick to that win rate, and because it really requires a lot of emotional discipline as well to really figure that out, right? Usually you will see most systems being around somewhere between 40 and 60% win rate, which I guess most of them are around 50% win rate. But the beautiful thing about proper risk management and having a win rate is, if you have a 50% win rate, you only really need to have a 2-to-1 risk to reward ratio, right? So right here, this number right here, that's the risk to reward, right? Which means that if this is at 2, like that, it means that if you're risking 1% on this setup right here, you will make 2%, right? So if you have a 50% win rate, you are going to be profitable with small trades like this one on average, obviously on average, right? So if you have a 3-to-1 win rate, and this is pretty crazy, because if you have a 3-to-1 win rate on average, you only need a 30% win rate to be profitable, which means that 70% of all your trades can be losers, right? And this is really where risk management is so important. You can be on paper and according to your win rate a losing trader, with having 70% of all the trades you are ever going to take be losers. But if you have an average 3-to-1 win rate, you are still going to be profitable. And that's also why you see people that have a above 60% win rate, they don't need to have like 2-to-1 or 3-to-1. They will actually have more like 1-to-5 or 1-to-75 average win rate or average R, because they have a much higher win rate, so they need a lower risk to reward, right? So when if you have a system with a high win rate, you're most likely going to have a lower average R. But if you have a win rate with lower or what? My smartwatch is talking to me again. So if you have a lower win rate, you're obviously going to have a higher risk to reward ratio. That's all obviously very important. So yes, let's see. So that means that after each trade, the dollar amount you put on risk changes independence of total. Yes, of course. If your account grows by 1%, on the next setup, you are going to be risking, I guess, 1.1 of your original account balance, right? So it's always going to be 1% of, I'm taking 1% as an example because that's what I'm using. You can use whatever, but it's always going to be 1% of whatever the account balance is when actually entering the trade. So if you start with a 100K portfolio, you're going to be risking $1,000 on each trade. But if you then increase that portfolio to 150, you're obviously going to be risking $1,500 on each setup. What about playing with leverage, right? So when it comes to leverage, for me, leverage is only a risk management tool. And let me explain what I mean by that. Let's go to this chart right here. And if you use a, let's bring back that example here where we had a 100K portfolio, 1% risk is 1,000. So if you, obviously if you use 10x on this setup, you're gonna get liquidated at stop loss, so that's not recommended, obviously. But if you let's say you have a so let's say for the example, for the sake of this example right here, let's say you have 10x 10x leverage. So if you remember, we had for this trade to be a 1% risk on spot, you had to have a $10,000 position size, right? Because $10,000 minus 10%, that's $1,000 in risk. If you add 10x leverage, you have to divide that position size by 10 to be able to still risk 1% on your portfolio, right? Which means that you are now in with a but yes, exactly. So you have to divide the position by 10 if you're on 10x leverage to be able to risk 1% on the portfolio still. And what I mean by using leverage as a risk management tool is that using 10x leverage or using 5x leverage will enable you to have 10 or 5x less amount of money on the exchange. So in crypto, for example, a lot of exchanges on not that, I guess, safe, and there's always the possibility of exchanges getting hacked or just getting rugged and stuff like that. So having less money on the exchange is definitely less risky. So for me, I use leverage to be able to have less money on the exchange. So that's basically how I'm using leverage. It's strictly a risk management tool. I am using Edgewonk, which is a great journal. It's not automatic. If you can import from Binance and stuff like that, but I'm only really journaling my day trading actively. So my day trading, I'm journaling actively, and my swing trading. My swing trading portfolio, I do like weekly reviews and stuff like that, but I'm not actively yes, of course, the funding rate when leverage trading, you obviously have to take that into consideration as well. So like leverage is interesting if you want to enter more smaller positions than what you would be able to do trading spot. Maybe you have like a spot trade where you or where you, when you're scalping, obviously you want to add leverage. Maybe you have a setup where the stop loss is like 1% below entry, and obviously you might not want to enter that setup with everything you have, because you might be that capital might be in another position. So you might want to add leverage to that to be able to use a smaller position, because you don't have as much capital on the exchange. All right, guys, we got 10 minutes. 10 minutes. Remember to like the video, subscribe to the channel, and hit that bell notification. Let's do some shorting request. I was actually looking at a setup on Ethereum BTC. Obviously, this is not really turning out as what I wanted, but I want to show you this idea that I had on Ethereum BTC here before we go. So how do you divide your portfolio for day trading, long-term hold, etc.? So I have most of my capital in my day trading portfolio, because that's what I'm focused on. And well, maybe not most. I think I have maybe it's about 50-50. So I have about 50%. No, it's not. Let's say 25%. If I take everything, like all that I have available in the market, I'd say 25% day trading, 50 spot trading, and 50 long term, stuff like that. But I'm slowly but surely increasing my day trading portfolio to be a significantly bigger portion of my trading capital, because that's like where that's my focus. What is your biggest win in percentage? I don't know. You know what? I have no idea, because I don't really care about percentage wise. I only care about risk to reward. And one of my biggest trades was on Ethereum a couple of months ago. That was a 22R trade, which means that, you know, if you risk 1%, you're going to be making a 22%. So that was actually my biggest trade to date. It was a scalp where I went long prior to a breakout, and I think on that trade I made somewhere between 20 to 25% of my portfolio in, I think, 2 hours. So that was definitely one of my biggest trades to date, and that made made most of my year. So that's the beauty of risk management. Just keep, stay alive. And you will hear a lot of traders say that, right? You will hear a lot of traders say that you have a few trades every year that are actually going to make your whole year. And that wouldn't be possible without proper risk management, right? So you risk 1% and all of a sudden you gain back like 10, 15, 20. That's might not happen. But if it happens, you're going to be happy that you stick with your consistent risk profile, right? Right, so this was a setup that I've been looking at looking for whatever on Ethereum BTC as a potential scalp. So if you look at the 1 hour right here, you are hitting the 1 hour 20 EMA right here. By the way, guys, don't forget about the giveaway. Use the link in the description below and use the code that you're seeing on the screen right now. Anyway, I was looking for a potential scalp here, right? So we were testing the 100 EMA down here, and looking at the 50-minute, we had a pretty nice trend going right here. And I like the fact that we had the 50 EMA on the 50-minute, confluent with that SR level, and also confluent with the medium time frame 382 fib and the local low time frame RLC. Now, I was waiting for a stochastics bull cross right here. That never really happened, so I wanted to see like a stochastics bull cross, a bounce down here, and then something like this, right, where we bounce up and then reclaim that level again, which would in this case be confluent with the 50-minute 20 EMA, and I would like to have my stops below the RLC. This is not happening right now, so no trade was made here, but I'm still observing I'm still kind of observing this price action right here. So what made me interested in this was this price action right here. So prior to this breakout, we had that 15-minute bullish candle, and if we were to have like that 15-minute candle closing above 20, and then another bullish candle, and then a retest of this area, that would be my entry trigger for a scalp long to new highs on Ethereum BTC. Well, not new highs, but take out these highs at least for a scalp trade. So that would be a decent 4R trade. I would take full profit at the minus 618 and move my stops to entry at that high right there. Let's see if we have any other interesting things I want to show you. So we have a couple of minutes. We have 5 minutes. So let's take a look at the current price action of Bitcoin from on a clean chart here. What is going on with Bitcoin? Yeah, so I'd say Bitcoin is looking very indecisive here. It's not really giving us any clear sign of direction today. I am definitely holding off on the entries on altcoins because of this. See if we can go to the main Bitcoin chart here and show you something. Still got my eyes on this setup right here. Because we could create a round the bottom here and a bullish break in market structure. I would like to go long if that happens, and this would probably look like that. So a lot of people are asking if I could post these scalp setups more actively in the Birb Nest, and I would use my individual channel, the Libs42 channel, in the Discord to post these setups. I can't post them as calls because this is on the 15 minutes and I'm going to base the entry on the 5 minute, and I'm entering I'm entering, and then within minutes it's going to get invalidated. So it's going to be most likely too late, or it's going to get stopped out, or I'm going to move my stop to entry, and that can happen within minutes. So I would rather kind of show you guys the system that I'm using and give you guys the tool necessary to find the setups on your own, because it's just not worth to have people entering 5 minutes after, and because that's just going to be it's just going to invalidate the whole setup, basically. But this setup right here will most likely look something like this, I'm thinking. That would be a around 3R trade, depending on where the stop loss is, which is decent. I try to always find setups that are above 2R. Let's go back to Bitcoin right here. Yeah, I'm not really liking this because sure, we're trading around the 20 and the 50 EMA on a daily, but we need to really reclaim that. We need to properly reclaim the 58K area, and it's just fake outs after fake outs here. It's not really giving us much right here. It's just a choppy medium time frame range here, and the daily. Let's hope that this is not a lower high. So because we have the first lower low, let's hope this is not the lower high, and let's really hope that we hold the 50K area, because if we lose the 50K area and we come down into this area, we have a bearish market structure, and I'm not really liking that. Let's look at the weekly 20 EMA. So we actually have the weekly 20 EMA at 47.9, and it's above that wick right there. So We could come down and test the weekly 20 EMA because we haven't done that in this uptrend yet. So we could come down and test the 20 EMA on the weekly and still have a higher low, right? So Bitcoin is not really in the danger zone until we lose 50K. So best case scenario is we wick down to 47.9 down here and then up again to reclaim this level and then this level. That would be like the best case scenario. I would definitely go long on a bounce on the 20 EMA because it will most likely bounce quite heavily on the 20 EMA weekly because it usually does, and it haven't hit that level yet in this uptrend. All right, guys, that's time is up, and I would like to thank you all for joining. I would really recommend you guys, like, this is important, right? This is very, very important. When trading altcoins, always try to figure out what Bitcoin is doing, right? If Bitcoin is super bearish, maybe you don't want to go long altcoins versus USDT. And if you are going long altcoins USDT, don't open too many positions at a time, because if you do open like 10 positions on altcoins and Bitcoin moves like in the next couple of minutes, you will get stopped out. That's just the nature of crypto trading. If you enter a lot of altcoins and Bitcoin moves directly after, you are going to get stopped out. So you have to take that into consideration. I see a lot of people on Twitter and the Discord, they're saying like, they say stuff like, Bitcoin is ruining the party again, Bitcoin is stealing my profits, but that's part of the game. And if you can't follow the rules of the game, don't be surprised if Bitcoin actually comes and ruins the party. I did not lose a lot of money on this dump because I follow strict risk management, and I know that Bitcoin is king in this market. So whatever Bitcoin does, you have to just follow and adapt, basically. So the sooner you learn that, the faster you are going to be profitable trading altcoins. And make a list of rules. Please do that. Make a list of rules like, I'm going to use 1 to 2%. I am going to do this when I have a big loser. I am going to do this when I have a big winner. I am going to be very consistent and disciplined in these rules of risk management. Because if you don't have a risk management tactic, you're not going to be profitable. All right, guys. Take care, everyone. And see you guys in the next one. Have a great Tuesday. All right.